I'm delighted to welcome Marco Antonio del Rio, who's the head of Financial Inclusion Department at the Comisión Nacional Bancaria de Valores in Mexico. And I'm also delighted to welcome Paul Ulrich-Pe, Deputy Head of Financial Inclusion for the Central Bank of Nigeria. So gentlemen, thank you so much for being here with us. We're delighted to have some public sector representatives among our audience of bankers, so thank you. So Marco, I wanted to start with you and really the work that you've been doing at the CNBV. In both cases, both in Mexico and Nigeria, we do see a significant exclusion of women when we look at the financial system, but there's been a significant evolution and a significant improvement with now Mexico having an 8% gender gap, according to Findex, which is data that's a little bit dated. But you do present a very unique case in that you have long collected really extensive demand side data, so survey data collected directly from customers, but you've also started recently collecting supply side data directly from the financial service providers. So can you tell us about your data journey and how did you begin collecting some of the sex disaggregated data specifically from the financial sector?
Sure. Thank you, Rebecca. And first of all, thank you to the Financial Alliance for Women for inviting me. It's an honor to be here with you. And also thank you for you and Paul to be in this panel. So yeah, so basically the journey starts back in 2012 with when we carried out the first round of our national financial inclusion survey, which is a survey that collects information about access, usage, consumer protection, and financial literacy, among other things. And well, that one of the key points of that survey is that the unit of analysis is the individual, right? It's not the household, because we consider by that time that if we follow the approach of surveying the household, that will undermine the gender gaps, because that households may have an account, but that account probably it's the owner of that account might be a man, not a woman. So that will undermine the gender gaps. So I would say that was the first like stepping stone of our journey towards having more sex data. And well, this survey is collecting every 3 years, and actually 2 months ago we finished the latest round, the 2001 round, and by January we will release the new data. The second step, I would say, that was back in 2017 when we collect and publish in our quarterly database of financial inclusion the first data coming from the supply side, from accounts and from outstanding loans. That would be the second step, and the third step, I'll say, that is the current step, in which we are collecting data from financial service providers about non-discriminatory policies within their financial institutions, as well as the women in leadership roles. And that would lead us to be able to publish next month the most comprehensive report about female-friendly ecosystems within financial institutions, women in leadership position in financial institutions, about in banks, cooperatives, microfinance, pensions funds, insurance companies, brokerage firms, among others. So I would say that's pretty much our journey.
Thank you, Marco. And I wanted to ask, Paul, a very similar question. And then again, we see a significant gender gap in Nigeria, 24%, quite high for the region. But the Central Bank of Nigeria has played a leading role in trying to close this with very high quality demand side data, which has really created a lot of awareness of some of these gaps. but also you have started to collect data from the financial sector. So can you tell us a little bit about this journey? And also you've just launched the Women's Financial Inclusion Framework in 2020, which is quite an exciting thing that has happened recently. So can you tell us a little bit about that and how you're collecting sex disaggregated data?
Thank you very much, Rebecca, and also thank you, Marco, for being here as well to share your country's story. Incidentally, actually, our inclusion gender gap depends on what research or what data you are looking at. Maybe you are looking at the Global Findex. The EFINA, the Access to Finance survey carried out by EFINA by the end of 2020 puts our gender gap in terms of financial inclusion at 8%. Other studies would put it much higher than that. It depends on the sample size and sample sets data sets that you are using. But then what was the most instructive? The most instructive thing is that there is a gender gap. There is a big gender gap. And what informed our launch of the Access to Finance framework for women last year, with a very strong emphasis on collecting gender disaggregated data, is that we want to close that gap in the first place. And then secondly, we want to have an informed product development for women, for women in terms of convenience, ease of use, access, and proximity. And we are also trying to understand the underlying features of friendly products that would, help accelerate access to finance for this women demographic. There was a landscaping study undertaken in 2019 by Delberg Research, which also found quite a number of things as very key to exclusion in the women's segment. First was income, lack of income. Second was lack of education or literacy. And the third was trust, lack of trust in financial products and services. And so our emphasis on gender disaggregated data is to try to drive a holistic process that would involve the women in terms of user-generated or user-based product development, because the verdict is that the current products that we have at the moment are not satisfying their needs, hence the slow uptake. Maybe proximity, maybe friendliness of the products not being tailored to their use and to their needs is driving very low uptake. So we need to take a turn, we need to make a shift, from the current state of things to a better option where women will be able to obtain financial services and products. And data could inform our policy decisions and even the initiatives or actions that we take. And so that's really what's driving our emphasis. We want to understand from a policy prism, from a policy lens, what's really the issue in our society about women uptake, and then be able to formulate policies that will be able to close those gaps. That's our story. We've started collecting the data, but essentially it's still something in development. It's still emerging. There's a whole lot of insights coming from it, which I will talk much later on. But our emphasis is on product development and accelerating uptake in terms of gender disaggregated data. Thank you.
Thank you so much for that, Paul. And I wanted to transition to Marco exactly on that. And what are some of the insights? Because we've been talking so much about data that sometimes I think a lot of times we tend not to focus so much on, well, what are we actually using the data for? And some of the insights that you found, I think, at the CNBV have been very interesting. So can you tell us a little bit about what you've learned from some of the supply side data, Marco, specifically, and some of the deep dive analysis that you've done as well?
Yeah, sure, Rebecca. So basically, let me tell you what was the rationale for doing this analysis. First of all, during the last couple of years, we collect and analyze. We analyze the data coming from the credit registries, actually with the financial support of the Inter-American Development Bank. And the reason to do that is because we have previously analyzed the data coming from the supply side for all those financial institutions that are being oversight by the National Banking Commission, which is where I work, the CNBV. But one of the things about this kind of data is that there are a lot of non-regulated microfinance institutions, right, that lies outside the CNBV's oversight spectrum, right? So basically, the first reason was that we want to capture all that data, so everybody was in the picture. The second reason is that we want to analyze the different paths, the different journeys of men and women, right? Because on our supplies and our demand side data, we just have just a photograph, and the same is true for the supply side. So we want to know what was the evolution of men and women, if there was some sort of a gap in their evolution. And what we found basically two things. The first thing that we found was that women pays better than men. Using descriptive statistics, we found that there was a consistently gap of 1 percentage point in terms of the non-performing loans for men and women, right? And using inferential statistics, using econometric analysis, and making all things equal, we found that there was a 10 percentage points lower likelihood of a loan being in default if the loan was disbursed to women. So that's the first thing that we found. The second thing that we found is that
everything, sorry to interrupt you, everything being equal, including loan size, women, there was a 10% less likelihood that women were repaying their loans, correct?
10 percentage points lower likelihood that women being in default.
That they would not be in default. Got it. Okay.
Exactly. And the second thing that we found is that indeed there is a different path. So on the first, like say the typically in Mexico, the first kind of loans that are being disbursed to people, either men or women, are credit cards and personal loans, right? But if we look at the second point on time, what we found is that women, let me say, is stuck in the same kind of loans, right? Credit cards and personal loans. And if we look at men, we found more men in, let's say, more sophisticated and more loans, like mortgage loans, car loans. So basically, yes, there was a less favorable evolution path in the financial system regarding loans. Yeah.
So when you say less favorable evolution, meaning that they're not accessing the right products, that women are not accessing the products they need?
Exactly. Yeah.
And can you tell us a little bit more about that? Were there specific areas that you looked at to understand sort of what were the more favorable products that women were looking at?
Yeah, basically because what we consider is that following like the life cycle, there's a point that people start. I mean, one of their financial needs is to have a house and to probably to buy a car, right? So for those financial needs, women are, I mean, are we not serving as in the same fashion as men? Just to mention that the need to, I mean, important to have data, not just to take just a single photograph but also to try to keep track of the different paths that men and women are following in order to know more about the gender gaps that exist, right? So
yeah, I think that's really important, and not because you were saying not just one picture, but the evolution of women's financial experiences. So thank you for that. I wanted to pass it on to Paul, and if everyone could please make sure they mute themselves if if they're not speaking. Paul, I also wanted to ask you a similar question. I know you've just started sort of the journey in terms of collecting some of that supply side data, but in some of the work we did with WIFID, with some of the Nigerian data, we found that almost 75% of the women's market potential remains unserved or underserved, but this could represent an opportunity of almost $800 million. Yet when we look at some of the financial institutions, we have some leading banks, including some members of the Alliance, that are developing targeted propositions for women, but this is really just a handful. So moving on to you, Paul, how do you think some of the data analysis and some of the work that you're doing could really help financial service providers develop better solutions for women? And Paul, did we lose you? I think we lost you. Are you there, Paul? Okay, can you hear us? I think we lost you again. Apologies for that, everyone. Can you hear us, Paul?
I think
Okay. Paul, can you hear us?
Yes, I am.
Okay.
I am.
I was moving on to you. I think somehow you got disconnected, but just in terms of some of
Can
the
you hear me?
insights from, yes, we can hear you. The question was on the insights for financial service providers in terms of some of the data. Yes, we can hear you. Can you hear us? Okay, while we get Paul, Marco, maybe I'll pass it back to you and really discuss some of the challenges, because I know it has not been easy in terms of the data collection and really even the analysis. So perhaps you can tell us a little bit about what some of those challenges have been.
Sure. I would say that one of the most important challenge is about institutional capabilities. Right, so at the early stages of collecting segregated data from the financial service providers, what we found was that those FSP were not able to collect those data for many reasons. One of them was their IT systems were not prepared. There was like lack of human resources capabilities to collect the data. There was also they were not prepared in terms of even in terms of the understanding of why that kind of information was relevant, right? So that brings to me the second reason, or the second element about the one of the challenge was not just within financial service providers, but also within financial authorities, that there was some sort of a lack of understanding about the importance, lack of awareness of why why collecting such data was important, was relevant. Everybody reassured themselves thinking that having a gender neutral regulation was enough to try to close those gender gaps. And nobody was seeing the importance of bringing to the table the gender gaps that already exist, and how that benefits that could benefit women. I could say those were the main challenges that we faced, and we're still facing that. Yeah.
Thank you for that, Marco, and hopefully, Paul, we have you back. And we were just talking about some of the challenges in the data collection, and I know you've just started the journey. So can you tell us a little bit about some of the challenges you faced and any lessons learned for particularly for financial services providers, as we have a good group of them among our audience?
Right. Some of the challenges is that we haven't always been reporting gender disaggregated data in the past. And so it has to do with a culture of reorienting ourselves to try and begin to, report that. And also in terms of internal systems and processes of financial services providers to adjust to reporting that. Secondly, also, there's been longer years of exclusion, especially amongst women and the gender imbalance. So it's going to take time for this to really, come into play. It's going to take time for this to become natural and normal for everyone. Number one is that it also adds like an additional imperative, an additional constraint to financial services providers. For sometimes maybe they do not have a desk or any processes set up to be able to, fulfill. Remember, we are trying to mandate this as a regulatory requirement. And so as a regulatory requirement, that would involve the setting up of processes amongst the financial services providers. It might require a dedicated individual as well, or a dedicated desk. So there are resource issues involved as well, and then more so, the most important thing is even the orientation, the changing of the culture and the orientation to begin to accept this as a new normal. And we're beginning to see, some trends come from the data, like, larger portions of women really have access to financial services, but data is skeletal, but some of the things we are beginning to see is that while there is a product uptake across certain products like savings amongst women, and it doesn't really have a huge gender gap in terms of savings, the details of the transactions themselves, like the value of those transactions, provide a clearer picture among the huge gap between men and women in terms of transaction values. These are clearly higher amongst men than women. So it gives us opportunity to look, this segment of the population really are dealing with very small micro level businesses, and it gives us an idea about how to scale them, how to provide, subsidies or intervention funds to be able to scale their businesses. But challenges continue to, remain in these segments, which is what we are trying to drive and clear those challenges to accelerate uptake.
And I would assume for credit, are you also seeing the same issue where the numbers might be similar, but the actual volumes are much lower for women?
Yes, because women are mostly playing in the very low volume credit segment, micro, we call it micro, majority of women. And they're also like individual business owners, small, micro, and medium enterprises. So I mean, that's it. And we'd also find a situation where banks are, financial services providers are really, big players are really very reluctant to advance very big volume or value of money to women segments. It's been a tradition that we are trying to change. Obviously, there are exceptions, but these issues of KYC, these issues of transaction histories, credit history, transaction history, to be able to allow women to uptake more credit to grow their businesses is also part of the culture that we are trying to change. So you're right. The volumes in terms of credit are really higher amongst men than women.
Yep. And some of the most interesting findings I find the CNBV, Marco, that you have done is really, this analysis where, a lot of us have assumed for many, many years that it's the size of the business because women have smaller sizes, therefore the volumes are lower. But what, the analysis you've done in really looking at a statistical analysis, regardless of the business size, women are still less likely to receive credit. I think that's quite telling, and looking at other areas, it's not just the size of the business. So I think that's incredibly interesting. I wanted to pass on, we're gonna open it to questions. We don't have a lot of time, but please do feel free to open questions in your Slido widget right below the screen. Make sure you type in it in the right panel, Gender Data Driving Systems, panel 3. So if you have any questions, I'll open it up to questions very shortly. But before that, I wanted to really, to me, the most important question, which is what are the implications? We have, it's great that you're collecting the data. It's great that you're starting to see some very meaningful insights. But as policymakers, as regulators, what are the actual implications on policy? And it's so interesting that Mexico has just announced some new regulation, and I would love, Marco, for you to tell us a little bit more about it, because I think there's a lot of learnings from different countries that can come from that.
Yeah, sure, Rebecca. So yeah, basically, on Women's International Day, the Ministry of Finance and the CNBV announced a regulatory amendment that took place, that was published on the official Gazette on the 23rd of July. That means that for all the credit portfolio of banks, the capital requirements for loans disbursed to women reduces by a certain factor, right? So this regulatory amendment was back with the analysis that we made that shows that women pays better than men. And so basically the adjustment says that for personal car acquisition of durable goods, the factor reduces 4% the capital requirements, 3% for mortgage loans, and 2% for payroll loans. It's just for now. It's just applicable for banks, commercial banks, and development banks, and just for individuals, not for SMEs. But probably in the foreseen future, we expect to move that as well. So basically, what we're expecting to see in the coming months, in the coming years, as a consequence of this change, is either to women receive loans with a lower interest rate, or that banks go promote more vigorously disbursing loans to women, because basically it increases the incentives, the economic incentives for financial service providers to start serving women their financial needs. So we're very eager to see how this evolve, but I think this is something that should be done for a long time.
So it's basically recognizing that banks' reserves can be lower because the risk is
Exactly.
lower, and sort of trying to
That's
promote them to take a bit more risk, basically.
Yeah.
So yeah, we'll be all watching. I think it'll be interesting to see how that pans out. But I wanted to ask the same question to Paul, and I know, again, you're early on in some of your data collection, but are there any implications in terms of policy, or what do you hope to see now that you've been able to gather a lot more data?
Right. What we hope to see is financial services providers taking much of a stake in women businesses, advancing credit to these segments, knowing that, diversifying their portfolio is much less risky for them than focusing on very few individuals who are high value, high volume individuals, and concentrating their credit risk, to a certain segment of people who they think are much more valuable in terms of doing business with them. That if they can spread their risk across maybe 10 million, 40 million women who are micro volume in terms of the number of transactions, of value of transactions, it enables them, mobilize and diversify their credit base, their deposit base. It also allows them to spread their risk, such that, if there is any financial crisis, their monies are not tied down, to single individuals, in high volumes. So it's a very good win-win situation for everyone. It's a win-win for the women. It's a win-win for the FSPs, because they have diversified their risk. They are also doing a social, a responsibility, action if they are extending access to finances to women. It also lessens financial systemic risk for the financial services providers, because if we can have an equitable, sustainable, and inclusive society in terms of finance, then it is good for everybody. The financial system will be more resilient, more safe than it will otherwise. So there is really a value proposition for for doing business with women. And also history has also, research evidence has shown that they are also more, potentially more able to pay back than the men. More of the bad loans that we do have also coming from different segments, not necessarily from the women. So that's my history, because I've worked with a women-focused organization at the grassroots level, extending credit, and the history and evidence that I have is that 95%, there's a 95% repayment rate with the women I worked with, when I was with another organization. So, I mean, it's a credible case.
I have here an excellent question from Lauren from DFC, who's asking about, as a bank regulator, you might be requiring the collection of gender disaggregated data, but are you seeing that the banks are actually seeing the business case? Is it not, are they just checking the box to meet this requirement? So maybe I'll start that question for Marco, because I think it's a really excellent point in terms of how do we make sure that banks are actually seeing the business case.
Yeah. Yeah, what I think is there's a very, optimistic view that is taking place within banks, that they are seeing the business case for collecting such data. There are a lot of efforts that bank have shared with us about how they are promoting women within their institutions and how they are planning to launch products and services that are tailored to women's needs. But saying that, I would say it also that there's a lack of the lack of understanding how to deploy such an efforts. I mean, there's a strong need to have benchmarks and to have a good practices in how to embark in such a project to start offering different kinds of products and services. There's a really need to say what are the other banks doing here in Mexico and in the rest of the world. How are they incorporating gender within their offer? So I think that there's a need to do that. The work is not already done.
Yeah, there's a lot that needs to be done, and I think by the messaging that you're talking about as well, Marco, I think that's quite important as well for the financial institutions. We only have a couple more minutes, so Paul, I'll ask you the same question from Lauren in terms of, are you seeing that some of the banks are seeing the business case?
Yes, definitely. The banks are seeing the business case, and we could borrow or extrapolate lessons from the consumer, fast-moving consumer goods segment, who collect data rigorously, all the time from customers. They do it all the time. What they do is to use those data to develop products that are suitable, and they are very aggressive. The consumer goods segment of most countries, very aggressive in terms of developing products and services that meet the needs of the demographics that their customer base. And they often do this by using gender disaggregated data. They target products at women, they target products at children, they target products at men, and in the youth segment of the population. It's been working. So, and I feel the banks too are getting it. I feel gradually they are coming around to the fact that you need to understand your customer base. You need to understand your customer base to be able to advance useful products to them. And then from our point of view, our role is to present that data to the banks and show them what the realities are, and then step back and allow them to be able to make sense of it all and decide how to use it and drive access to finance, especially for their customer segments. Thank you.
Thank you so much. And we have only, I think, 1 or 2 minutes, so I will end. And Manar has an excellent question about supporting the financial institutions, which I'll let you maybe respond in the chat. But I wanted to quickly end with sort of the future. What's next? And maybe in just a few words, Marco, for you, what's next in terms of data collection on gender, obviously, and then to Paul.
Yeah. So I'll say that first, what's next is start collecting data from women-owned SMEs finance. Yeah. Second, I would say that is to trying to translate all all those data that we collect and publish in terms of something that it's, how would I say, like actionable. So translate that in terms of first in a healthy like competition for serving women. Well, so we're trying to capture all the information in an index of gender and gender lens in financial institutions. And second, to provide good practices in what we will publish next month and in the coming years. So how to say that these banks are doing this, you should be following suit. I would say that.
And Paul, for you, what's next?
Our next step is to engage the financial services providers. Currently, we have set up at the Central Bank of Nigeria here what we call a sandbox, a sandbox where every provider could come and really tease out their ideas and product ideas. And as they do come, we're going to present them with some of this data so that they look at it, the implications of it, and maybe what potentialities lie ahead of them, and what product options are available to be able to close the gaps or meet the needs of their clientele, their customer groups, especially the women's segment. So basically, that's it, to inform them about useful data and leave them to make decisions in the sandbox space as to how they take it from there.
Well, thank you all very, very much. Thank you, Paul. Thank you, Marco, for opening up and for sharing your insights. We'll see you back at the main plenary. Thanks, everybody, for joining us.
Thank you very much.
Thank you, everybody.
Bye-bye.
Thank you, Rebecca. Thank you, Paul.
Thank you.
Marco.